welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Pierre Verster from Protea Capital Management and Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. I actually have not checked where the rand is today. Yeah, still over 18 rand. And there's actually, I want to actually start off with that because it has weakened considerably. So let me start off with you, JP. Can you give your thoughts on our rand that is weakening? Is this the cause of our mining stocks that are performing badly, or is it political? But the euro also seems to perform badly against the dollar. I think this is because of the German government collapsing, and this is probably the reason why the DAX, CAC, and Euro Stock 600 is doing well. Okay, let's start off with the rand against the dollar. Is it political? Is it the pressure that we've seen on the resources? I think today was down more than 3.5%, and I think it was a similar move yesterday as well. JP?
Yes, a little bit of both, Zinati. I would say that the major reason, if you want to boil it down to one reason, is the strong dollar. So the dollar has been very strong, and when the dollar is very strong, that's bad for emerging market currencies like the rand, and it is bad for commodities because commodities are generally priced in dollars. So a strong dollar means money flows out of commodities into dollars, into cash, and commodities get more expensive. So generally their prices then fall in dollar terms because the dollar is stronger. Then one should ask yourself, but why is the dollar stronger?
Yeah.
And some of that has to do with Trump, a Republican presidency. He's already tapped a few hawks around him. So it looks like America is evidently going to put themselves first. And I think you saw this morning China stocks being particularly weak in Hong Kong. So that shows you, yes, that whether it's European companies with exposure to China or emerging markets with exposure to China that maybe export commodities, we are all weaker off as America put themselves and their own currency first.
Yeah. Zwelakhe, what is your take on this and just particularly what this rand weakness could mean for people's portfolio positions?
Yeah, I agree with JP, but I certainly think that the Trump wave has swept most of the emerging market currencies off their feet, and Europe hasn't been spared either. I think the main thing is that we would likely see inflation, instead of continuing to decline, we would probably see it stabilizing around more recent levels, primarily because we'll see currencies pushing inflation on imported goods, but also you will see that later down the line, you'll see that the tariffs, if there are tariffs that are put on many of these countries, you'll see that those tariffs would be inflationary as well. So I do think that the Trump wave is probably a bigger factor without discounting what JP has said.
Well, actually, just on that question of the European markets, because the US markets have been rallying, of course, taking a breather today. And just on the reason why those European markets have been doing well, JP.
Well, European markets haven't been doing that well. If I look on my screen, I can see that they were lower today by 2%. So Europe was down sharply today. And a large part of that is exactly as we've explained now, a stronger dollar. You would think a stronger dollar, meaning a weaker euro, is good for exports. But if you look at some of the bigger companies in Europe, they make their money not necessarily from exports where they produce the goods in Europe, but they produce their goods outside of Europe and sell out of Europe. And the principal ones that include those are the luxury goods companies, like LVMH. It was down sharply today, again, because of its exposure to China. Even the likes of Novo Nordisk, they make a lot of drugs, the GLP-1 drugs that gets sold in the US, and a lot of their production plants are outside of Europe. So you don't have that benefit of European production being then exported out of Europe. The major product that is produced in Europe and then gets exported is motor vehicles. And there the Europeans are really struggling against the Chinese. and the technology and the EV vehicles that are coming in at a much lower price. So Europe is in a tight spot, and the stronger dollar is not as good for Europe as what it could have been in the past when Europe was still an export-driven economy.
Talking about tight spots, I don't know if it's me. I think me and Simon are being dragged here, but for no reason. The viewer says, please ask panel about Sasol. You always avoid Sasol, even the last time you presented. But we don't. You talk about Sasol all the time. Zwelakhe, Sasol, what is your take on Sasol? Because I know this viewer, they do hold Sasol, and they're always trying to figure out if they should sell or maybe buy more and maybe average out when it's lower. Yeah, your take on Sasol, Zwelakhe.
Yeah, I was hoping to avoid it myself, but I think it's pulled back. I mean, quite significantly to a point where it's probably reasonably priced, and I'm not saying cheap. I think it's become a business with a portfolio that's got offsetting characteristics. So the chemicals that they sell tend to, the price goes down as the oil price goes down, but the feedstock also goes down. On the other side, the price of oil going down would actually impact on their fuel business. So I think the outlook may be that the oil price, at least from my perspective, I do think that the oil price would probably has seen a ceiling for now, primarily because the wars in the Middle East might actually take a different turn under Trump. He seems to be hell-bent on ending the wars, and that could actually deflate a lot of the war premiums, the geopolitical premiums that are in oil, but also in the precious metals. So I do think that Sasol is probably reasonably priced for the long term, but if short term, there could still be volatility.
And it's actually quite crazy because just when you think that it can't go any lower, it goes lower. Because I think when was it about 2 weeks ago, it was at 98 Rand. Now it's at 95 Rand. JP, I don't know. For people who are considering playing this game of how low can it go, who are patiently waiting for Sasol to get to, I don't know, maybe cheaper levels, what would you say? Should they wait? What should they do?
I would say they can remind themselves of what happened in 2020. It went much lower. It went into the 20s. Yeah. So that shows you that when it comes to companies that are not necessarily high quality, their share prices can go much lower than what you would otherwise expect, than what you would think if you think about the fundamentals, the PE or the price to book ratio, or how much tangible assets the company has per share. Share prices can go much lower. And the big reason is it happens specifically where there's a question mark about the terminal value of the company, which means if you put yourself 10 years in the future, can you clearly see that the company has got a reason to exist and a good competitive advantage? And with Sasol, the answer is no. I'm not sure if it's going to exist in 10 years because the gas feedstock is drying up in Mozambique. Then they need to import gas. The economics of that is way worse. The fact that they make oil from coal in a very, very dirty process, and through that emit and pollute our skies here in Gauteng and in Mpumalanga. You know, if you had 60 billion Rand today, which is the market cap of Sasol, would you spend that in developing the Fischer-Tropsch process and creating oil out of coal in a very dirty process? No. So on the flip side, in the US, they make plastics. And we all know also that people are taking a second look at plastics and saying we don't need these things that don't biodegrade. There are other ways that you would rather package things that are a little bit more expensive, but at least we don't pollute the oceans for thousands of years. So I would say Sasol is a value trap, and I would just stay away from Sasol.
I just like to say I miss plastic straws. I'm not so sure what to do with the paper straws that get soggy. So I want to come to you with Premier. I had a look at Premier Group, the 6 months results, of course, that came out today. Revenue growth of 3.7%, EBITDA growth of 13.2%, primarily driven by the growth in the Millbake division. Net finance costs also decreased. Question, is this growth sustainable, Zwelakhe?
Look, I think if one looks at the state of our economy, I think there's there's a bit of optimism in the economy in terms of the era of the GNU. I do think that we'll see an improvement in consumption expenditure, and Premier is one of the players in that space. They're likely to benefit. So I do think that the growth will be sustainable. I mean, it wasn't a lot of growth that came through at the top line. It was the cost management that also helped them. But I think where we are, there's probably a bit more potential for their revenue to improve.
All right. Well, actually, second part of that question, talking about the fact that the Millbake division was one of the drivers. So an increase in volume of 2%, that Millbake division, meaning they gained market share. Who is losing this market share? Tiger Brands. JP, what do you make of that?
I think until recently there has been Tiger Brands, yes. I think that's fair to say. Remember that we don't have Pioneer Foods as a listed business anymore, so there's a question mark. We don't get all the competitors in the listed environment reporting. And then, you know, in the more informal sector, there's still a lot of unbranded bread, and there's still a lot of shopping shops that bake their own bread, and it's not one of the major brands, and those breads are normally substantially cheaper. And depending on how consumers perceive the quality of that baked bread, they might sometimes gain or lose market share. So there's a lot of swings and roundabouts, and something we miss when you look at listed companies. It's not that only listed companies exist. They're not the only representatives of a specific industry. There's a lot of private companies out there that aren't listed, big ones and small ones. So you can't necessarily know what's happening in an industry and who's gaining and losing market share just by looking at the listed players, because normally there's a substantial part of any industry that's also in the unlisted environment.
All right. And I actually want to go into AVI as well, because they also had an update for us. And actually that tone seemed to be a little bit on the sour side. And yeah, JP, is this what investors saw? Because I saw that it took about a 4% knock today.
Yes, the top line growth that they indicated a bit lower than expected. It is just a couple of months that they gave an update for. It was the statement of the chairman at the AVI annual general meeting. So we need to wait and see what that means when you have a full 6-month period, a full half year of results in terms of the bottom line. They did say that they were quite comfortable with the cost management. So it's unsure to know if you have a very low growth at the revenue line, what does it mean for the profit line? We just spoke about Premier. They show that even with little revenue growth, you can still show decent profit growth if you keep a lid on costs. But AVI have kept a lid on costs for a long time. The I&J fishing business sounded like did not have a great time. We know that the catch rates have been low for a while around our coast, unfortunately. So yes, I would say it was slightly more negative than positive.
Yeah, what did you make of that, Zwelakhe? Because I know also this is one of the favored food producing counters on the JSE.
Yeah, I agree with JP, but I think the big swing factor is going to be their spits business, their footwear. I think the other businesses, I mean, I don't have high expectations on I&J at any given point in time. But I do think that Spitz had carried them for a very long time, and they're struggling to see with consumer being under pressure. They've been struggling. It might actually turn a little bit now that people have received some two-pot system payments. But long term, I think they're still the jury's still out. I mean, I'm not sure. I think AVI may need to be broken down into pieces that can be run independently.
JP, there's a specific question here for you. Your view on Tesla, BYD, and Stellantis, a previous pick of yours.
So I'll do the two EV businesses first. BYD is the largest EV business in the world, electric vehicle business in the world. The last quarter, for the first time, they had higher sales for that quarter than Tesla. So they're a larger seller of electric vehicles. But then the Tesla share price has increased with something like 40% in the last few weeks because Elon Musk is Donald Trump's new BFF. So all of a sudden people think that even though Trump and the Republicans are not good for the green revolution and EVs, that because Elon Musk is so close to power, it'll be okay for Tesla. Still, I prefer BYD. I think that the business is more profitable, that the product is as good, but is sold at a lower price, so they can benefit from bigger scale. So I prefer BYD to Tesla. And then Stellantis, I've liked it, but sure, they've really messed up in the US the last 6 months with too much inventory, and they're working through that. And they're also trying to transition from internal combustion engine vehicles to EV vehicles, spending a lot of money. And they had a good few products in Europe the last year, but as of late, also the Chinese EVs are better than the likes of Opel, Fiat, Chrysler, and all the brands that they have. So I would say BYD would be my first preference, Stellantis somewhere in the middle, and Tesla because of the ridiculous valuation at the bottom.
All right. Well, let's move on to paper and packaging. Mondi, the viewer says I'm a devout viewer of Stockwatch. Thank you for watching. Can the panel please give me some guidance on Mondi paper? I have recently bought some for 300 per share just to get an exposure going with the intent to gradually build on the position. My horizon is 12 to 18 months into the future. Since then, the share price has dropped quite a bit. May I please have your opinion on this? Yeah, Mondi seems to be under pressure recently, Zwelakhe, and actually quite a contrast to what SAPI is doing.
Yeah, I think Mondi has struggled. I mean, I think the Q3 numbers, I think they came out in June, I don't remember. But the numbers were under quite a lot of pressure, so cost up and revenues under pressure. And I think one of the things that they did to exacerbate the situation is the acquisitions that they made, a new acquisitions that they believe that will benefit them in the long term, in the corrugated packaging space, which is a good space. But I think that they might be getting into a cyclical downturn where prices are lower and the costs have been climbing. And that might create a squeeze for them for a little while before we see the consumers coming through, especially in Europe.
Yeah. On your side, JP, what do you make of this, and particularly with the viewer having bought at 300 and now seeing this pressure? Would you say that they should hold on? Yeah.
So my preference is with companies that have clear competitive advantages, high returns on capital, wide margins, or at least very quick asset turn if it's low margins. And you don't have that with Mondi. So for a couple of years, they did quite well. It was mostly when, e-commerce was growing very strongly, and especially through COVID, when we all needed to order things that were delivered in a brown box, which is what they make, basically. And now that we can all go to the shops and rather use our recyclable bags and using less boxes, the growth rate has decreased. So yes, e-commerce is still a structural growth industry, but there are also more competitors there. So I wonder, did they have a competitive advantage when they did so well, or was it just like a purple patch? They went through a period where the rising tide just lifted all paper boats, and now it shows actually that they don't have a proper competitive advantage. So I'm not a big fan of commodity companies, and I would say that Mondi for me looks more and more like a commodity company.
All right. Well, let's get into chip makers. Since I left high school, I've been creating a portfolio of what I consider to be monopoly compounding machines. In my portfolio, I have Visa, Microsoft, Apple, Google, Amazon. I've been currently doing a lot of research on ASML, and it appears to be a good investment case. I just love to hear a bull and bear case for ASML and whether or not this would be a good price to buy in. It's quite interesting because I think when they released their numbers, they were quite disappointing. But we saw a lot of people still saying that this is a good buying opportunity. So there's been a lot of bullishness on the stock. Zwelakhe, I'll actually start with you. You can maybe give the bull, whichever one, bull or bear case at this point.
Yeah. I think I'll give both. So on a bull case, I mean, I think long term the business is very solid, high competitive advantage. I think the kind of products that they have that edge the chips are impossible at this stage to replicate. I think in the short term, what we've seen is that their orders have dried up. I mean, the replacement rate of the orders has been very bad, which is what led to the recent results, the reaction after the recent results. So I would probably say long term you'd be fine, but I think currently, if you're looking 12 to 18 months, you need to be cautious.
Your take on this, JP?
Yes, I think bull case would be that no one's going to catch up with them with their technology in terms of EUV, how they etch those chips at a very, very small micron level. And if they can maintain that competitive advantage, it means over the long term, as we use more microchips, they will continue selling their machines. The bear case is, well, they've sold a lot of these machines. Maybe the rate of sale slows down, which we have seen most recently, as Zwelakhe also said. And then secondly, there's a lot of other industries where we thought, oh, someone's got a monopoly. China will never be able to catch up. And China did catch up and then even exceeded some technologies. So who's to say there's not some clever semiconductor company we've never heard of and we can't even pronounce the name of, sitting in China getting billions of dollars or yuan of subsidies, and they come with some new technology that's even better. So I think that's the bear case for ASML.
All right. Well, let's go into the last question before your stock picks. I bought a Bell equipment when the announcement was made for the buyout, paid 49 Rand. Should I hold on long term or sell at a loss? Zwelakhe?
Yeah. I don't like Bell equipment. I covered it as a young analyst, and it's a terrible business. I'll take my money and run.
JP, do you have a different view?
The wonderful thing about a market is you need buyers and sellers. So if Zwelakhe is a seller, I'll be a buyer. I do think that it's clear that the family wants to sell. It's just a matter of time. And I think if people said no to a bid of 54, then surely the next bid must be higher. You might need to wait a bit. So if you have patience, I would be a buyer and I would rather wait.
All right. Well, gents, let us get to your stock picks up for today. Zwelakhe, what are you hanging your hat on?
I'll go with the BAE Systems, the defense contractor with operations in the US, UK, and Sweden and other European countries. Primarily because as Trump comes in, he's talking about these European countries that haven't been paying their fair share of their defense budget, 2% of defense budget. And you've put that on the table. I think that will support a very strong defense order book. That would be beneficial to BAE Systems, amongst others. And they seem to be producing very good defense products.
All right. Well, JP, on your side, what are you choosing?
I'm also choosing a company listed in London. It does seem like there's a lot of opportunities on the London Stock Exchange. It's called Bank of Georgia. Now, when I say Georgia, I don't mean the US state of Georgia. I mean the country Georgia in Middle Asia. That country, Georgia, Bank of Georgia. So it's one of two leading banks with roughly 40% market share. They came out with results earlier today. Very strong loan growth, very strong profit growth. The economy of Georgia is growing nicely. Yes, they've got some interesting neighbors like Russia to the north, but Russia is so occupied, excuse the pun, with Ukraine that hopefully Georgia is okay. There was a bit of interference with a recent election, but Georgia's candidate that's more closer to the EU did do okay. They also own a leading bank in Armenia, which borders Georgia to the south. So you've got a leading bank in Georgia, a leading bank in Armenia, both economies growing at a relatively high rate, more than 5% GDP growth per annum, relatively stable economies, notwithstanding the neighborhood, and not a lot of competition. And the fact that Bank of Georgia is listed in London means that you've got good corporate governance. So I like Bank of Georgia at this price.
All right. Well, thanks so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Pierre Verster from Protea Capital Management and Zwelakhe Mnguni from Benguela Global Fund Managers. Up next to the close. Stay tuned.